Happy New Year! I'm Justin Costelli. This is all about your Benjamins, and this is your weekly mixtape and weekend review for January 5th, 2019, the very first one of the new year. I hope you all had happy holidays and your new year is off to a great start. You're re-energized, you're focused, you're excited for the upcoming year and the opportunities that are going to be here, because I know I am. So I hope you all are as well. It was a busy week, a short week. We only had 4 days this week with the holiday, but it was busy, a lot of headlines to cover. So let's just get right into the headlines driving your financial planning and your portfolios over the last week. The partial government shutdown continues, and it doesn't look like there's an end in the near future, although according to reports Friday there were some good conversations between President Trump and Nancy Pelosi that maybe they're going to be able to come to some type of agreement. But right now we're still deadlocked, not moving anywhere on that front because of funding for the wall between the U.S. and Mexico. So President Trump has said he will not sign any bill that lands on his desk that does not have some funding for the wall to be continued to be built. We will not go into whether or not that wall is important, but that is where we stand today. So as this lingers, obviously there are people being impacted by this and that they're not working, not able to collect a check. So I obviously sympathize with them and want this to get fixed sooner rather than later. I did find an article that I thought was a little interesting this week, that the IRS is now being impacted by the government shutdown. So while we will not be relieved from having to pay our taxes this spring and start doing that now, they will not be paying refunds while this government shutdown lingers. And I don't know if the refund will be pushed out further, even if it gets the government gets back to business as usual sooner. But the articles did state that as long as this goes on, refunds are not going to be issued and they may be delayed down the road. So if you're relying on that refund for something special, you may want to rethink those plans and adjust your plan, because there may be a chance that that gets pushed out further in time and you don't get that when you usually would. So again, doesn't get us out of paying taxes, of course, but it means we may not get our refund when we might usually see that come through. So just be aware of that and stay tuned to see how that plays out. The next one, the obvious one, Mr. Market. Mr. Market was not done having fun with us from 2018, and the roller coaster ride continued into this first week of the year. What do I mean by that? Volatility is still here. And don't be scared by the word volatility. Volatility is usually referred to when the markets are going down, but volatility happens on the way up, which was what we saw on Friday as well. So those wide movements of volatility are not always a bad thing. But nonetheless, the exciting ride from the end of the year continued into this year. Had a couple down days, a real big day. A lot of movement going on this week, and some of the headlines that drove that were Apple changing their guidance for first quarter. So Apple is one of the obviously biggest companies, most well companies, most held companies as far as investing goes. A lot of people own individual shares of Apple, but if you're an investor in an index fund or a mutual fund, you have Apple in your portfolio. It's one of the most widely held stocks out there. And they did something that they don't normally do. They put out a change in their guidance as far as what they set as expectations for the first quarter this year, letting us all know that they're going to fall short in the way of iPhones being sold. So Wall Street did not like that. Investors did not like that. It was a surprise. Investors don't like surprises, so they had to readjust their forecast, and that meant Apple's stock got hit pretty hard this week. I don't want to spend too much time on the stock, but just that was one of the big things that moved. So Apple, because it's a big part of the indexes, dragged everything down. Also, it wasn't a good sign for other companies. Questions come, well, if Apple's having trouble, and they were citing China as one of the main reasons with the tariffs going on. If Apple's having trouble, and that's one of the strongest companies we know, what does that mean to other areas? Well, Apple is a technology company. There are companies in other areas, so I don't think that Apple's guidance cut sets the stage for every company, but it is worth paying attention to. One thing that we saw. So that was one of the big things this week. We also had a tremendous jobs report on Friday. So the U.S. economy added 312,000 new jobs versus an average over the last 5 years of last month of 215. So it was a big surprise to the upside, although we did see the unemployment number actually tick up a little bit. So we had jobs go up, unemployment tick up just a little bit, nothing to be alarmed about. And that was a good sign for the economy, showing that the economy may not be slowing as much as feared. So we have a little interesting dynamic here. We have Apple changing their guidance going forward, saying things are slowing down, and maybe that's a little bit of a forward-looking indicator. And we have the jobs report, which, while that was an exciting number, is actually looking in the past. So we have some conflicting numbers here, which is what makes investing so hard, which is why I think we always come back to a long-term horizon, being diversified, not trying to play the markets, not trying to pick the right stock, because it's a hard thing to do. You have Apple saying they're having trouble, but you also have the backward-looking data for the U.S. jobs sector showing a very positive move. So what do we believe? How do we digest all of this? That's why I think it all comes back to a plan, keeping things simple for ourselves and not trying to figure this stuff out. Let the pundits on TV create their stories, create their arguments, have fun talking about that, and we focus on the other things that we can control. So jobs were good, which is obviously a good thing. We'll have to see if this momentum continues and that the economy stays relatively strong. And then the final big thing was Fed Chairman Jerome Powell came out and he was speaking, and he talked about the economy being strong, that the Fed is going to be more patient, and that was a very key word that he used, about upcoming rate hikes, and that they're going to be flexible, adjusting to what the economic data and what they're seeing. So it made it appear as if the Fed is actually paying attention to the markets and seeing what's going on and weighing that into some of their decisions going forward. I don't think these comments were influenced by the White House, which was something that I was a bit concerned about with the comments coming out from the president about the Fed, and would they react to that, and is that barrier between the two sides broken. It still sees, at least my take, it still appears that the Fed is independent of the president, and I think that will always be the case. But that this commentary was good. The market loved it. That helped run it up even more after the jobs report being strong. A few interesting things before I wrap this up with the Fed. It was noticeable that Chairman Powell actually had his notes written out, and this is not something he's tended to do in the past, which makes it appear as if he realized what the message he delivered earlier in the, I guess late last year, was not received well by Wall Street and investors. He really didn't say too much different from that speech, but the words were much more specific, and it appears as if he didn't want to make a mistake in the words that he was used, and be very clear with the message he wanted to deliver. So the message was, the economy's strong, the jobs and the employment numbers are good, they're not too worried about wage growth, inflation is in good shape, so that they're not going to be raising just to raise, they're going to be patient, but that if the economic data continues to be strong, then they may still. So it gave him more flexibility. I believe he even used the word flexible. So Wall Street and the investors like that. I do think that sets the tone for a better year when it comes to conversations about the Fed, and maybe the market will be less reactive leading up to those meetings. So that are the main items that were moving the market this week if you read the headlines. One final thing, Nancy Pelosi was voted Speaker of the House, which was not a surprise. So now the Democrats are in control of the House. This could lead to some more back and forth when it comes to the political landscape, which could potentially impact the markets depending on what it is that they're debating and what gets done or what doesn't get done. So that was the other big piece of news this week. Obviously there are regional things going on, but this is kind of the high level big things that you probably heard about. You're going to be hearing people talk about that impact your plan and your investments. As always, I think all of this is exciting to follow. It's good to know what's going on, but when it comes to your plan, my financial plan, and portfolios, I think all of this is really just noise we don't need to be reacting to, and I will continue to drive that message home every time we meet, or every time we talk. So I appreciate you sticking with me for this first one of the year, a little bit longer than normal, but there were some big headlines to cover, a lot of things to talk about. Thank you for watching. Thank you for listening if you're listening on your Amazon device. If you're not listening on your Amazon device, be sure to go find the RLS Wealth Management Flash Briefing skill. Add that to the mix. I will be doing this. Tuesdays we have outtakes from podcasts, and then Thursday I highlight some good reading, whether it be reading myself or recommending. So some things throughout the week to kind of just keep you up to date with what's going on, give you some bigger picture things to focus on, thinking about behavior of investing in our planning rather than always news, and investing. So thanks for watching. Be sure to subscribe to the YouTube channel, to the podcast, to the Flash Briefing skill. And if you would, throughout this year, I really want to try to make this video and the videos that I do and the content more beneficial and more enjoyable to you, give me some feedback, whether it be hitting me up on Twitter at Justin if it's sending me an email at contact@allaboutyourbenjamins.com, or leaving comments on YouTube. Give me some constructive criticism. I can handle it. I want this to be beneficial to you. I want you to enjoy this. I want us to have fun, and I want it to be informational. So if there's things you'd like to see covered, people you'd like to see me have on the podcast, different changes to this format, let me know so I can make this worth your time and be enjoyable for you, because I'm enjoying doing it, but I want to make sure you're getting something out of it as well. So with that, I'll shut up, let you get to your weekend. Thanks for listening. Thanks for watching. Be sure to check all the Mixtape articles down below. I've got some great posts this week, and I will see you all next week in the next weekly Mixtape and week in review. Have a great week.